Eicher Motors trades higher after commencing operations at its unit in Brazil, which is the single largest Royal Enfield market outside of India, a market where business has more than doubled since 2019.
And regulatory headwinds for Sun Pharma. The US FDA lists the company's Halol facility under import alert. All future shipments to the United States will now be subject to refusal of admission. The stock is down close to 2.5%.
PSU banks continue to rally. Bank of Baroda hits another life high after Credit Suisse raises targets. PNB and Central Bank surge, while Bank of India is the top gainer after Credit Suisse upgrades the stock to an outperform rating.
Macrotech Developers launches a 3,500 crore rupee QIP to meet the minimum public shareholding norms. The stock is higher by close to 2.5%. A large trade also takes place in Triveni Engineering. 11.5% equity changes hands, with the promoters likely to have sold some stake.
And it's a steady debut for agrochemical maker Dhamraj Crop Guard. The stock lists at a 12% premium to its issue price of 237 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me today is Ekta Batra. Well, Ekta, you got some signs that maybe, in fact, the FI shorts in the system, the PCR as well, had moved lower. And that's why from the lows of the day, we have seen a good bounce, both on the Nifty and the Nifty Bank. The big question is, what do we do from here? For that, we have Sachitanand Utekar, who joins us. Hi, Sachi. Morning. We're up 33 points odd. We closed at around 18,600. How much higher can we go from here? Where's the next level of resistance?
Good morning, Nigel. Clearly the kind of movement of which we have witnessed so far, Nifty is still concealed within its previous day's swing range. So if you look at the bounds, they are clearly defined. 18,670 is the breakout zone, and on the lower side, 18,530 was yesterday's trading low. So I think until unless we don't see a breakout outside this particular range, one should not expect momentum. As of now, the option pain is suggesting a move towards 18,650. So probably we may see that particular level getting re-established. But as of now, there is no strong signs of momentum here when it comes to Nifty. On the other hand, Bank Nifty is something which is interesting. In fact, it has been holding well above its 5-day exponential moving average for the last 4 trading sessions. And right now, what we have observed is that there is some action on the positive side, primarily led by stocks like Axis Bank and ICICI Bank. So probably we may see one trade setup on the long side when it comes to Bank Nifty. I think fresh longs can be added here. The stop loss should be placed at 43,140. And on the higher side, we could see Bank Nifty swinging towards 43,680 to 700. So I think the trade setup is better in Bank Nifty on the long side. And Nifty, I think we should avoid for the day.
Okay, avoid the Nifty for the day, and the Nifty Bank is showing better signs technically. In fact, it is outperforming. Clearly, we've been talking about how a lot of the PSU banks continue to be in focus on account of positive brokerage notes as well. But Sachitanand, I wanted your thoughts on in terms of stocks. What are you tracking today? And separately, what would your view be on Sun Pharma? Because it's had a good year. Today, there's negative news. How would you approach it?
Well, Ekta, I think on Tuesday, again on your channel, we mentioned that, Sun Pharma is showing a double top kind of formation. And that's why we recommended shorting Sun Pharma for a price target of 990. I think that particular level has been achieved. But if you look at the entire sequence for the last few trading sessions, we have been maintaining a stance of, keeping a long short kind of a combination while trading. So again, if you look at my picks, we have a fresh short position recommendation on Biocon, which we have also communicated to our clients. Now, this particular counter has been underperforming since last 3 weeks. We have already seen a fresh breakdown from a channel formation indicating a price target somewhere close to 265. So Biocon is a counter which can be considered on the short side. The stop loss for the trade should be placed at around 279.30 when it comes to futures. And on the long side, last week we talked about a positive divergence on HUL, and right now we are focused on Colpal. So we have already seen a breakout from a classic cup and handle formation. The breakout level was placed at around 1640. Post that, we have seen some strong over additions on the long side, exhibiting a price target somewhere close to 1700 when it comes to intraday. But positionally, I think 1740 could be a target. Stop loss should be placed at around 1640 itself, and fresh long positions can be added in coal path.
All right, Sachidanand, before we let you go, Reddington, that one talking about breaking out, that stock seems to be doing quite well. Volumes are high, and, as the market is wobbly as well, that's been moving only one way, up. Even in the last 1 month or so, it's outperformed the indices. Sajay, any view on this one? It's holding at around 190. Fresh all-time highs on this one again.
Well, I think despite of the move that we have seen in the last 2 months, the stock is still not quoting in its overbought state. If you look at the weekly RSI, it is somewhere close to around 68. And if you look at the multiple tops which have been breached, so probably we may see this particular momentum getting carried forward. So immediate basis, I won't be surprised if we see a level close to around 205. But positionally, if you look at the entire structure for the last 2 years or so, it is exhibiting a price target somewhere close to 225. So I think if you have a long position here, it is better to trail your stop losses higher. 179 is the level below which this particular momentum can be stalled. So clearly, the performance has been good. The momentum has been strong. So 205 and 225 are my targets.
Okay, all right. Thanks a lot for that, Sachidanand. Wishing you a good session ahead. But one stock that's under pressure, Ekta, is Sun Pharma. Regulatory headwinds yet again, and that one has seen a sharp correction intraday.
Yes, absolutely. It's been a patchy year when it comes to the US FDA and all of the Indian pharma companies. And for Halol, it is definitely negative news. So their Halol plant, which is basically Sun Pharma's one of their key plants when it comes to the US, has been placed under import alert. Now, what does import alert means? It is one of the strictest forms of regulatory action from the US FDA. It means all future shipments of products manufactured at the facility are now subject to refusal of admission to the US. This is until the facility becomes compliant with their good manufacturing practice standards. Now remember that the US FDA in particular, for the Halol facility in particular, has excluded 14 products from the import alert, which is subject to certain conditions. Now supplies from Halol to the US were around 3% of the consolidated FY22 sales, which is including these 14 excluded products. So hence, excluding it, it should be around 1% of total sales. So that would probably be the silver lining. Now, what is negative is the fact that, the Halol plant continues to be under the regulatory scanner. I'll just give you a background. This particular plant had an official action indicated status, which is pretty much a regulatory action could be taken on this facility. It was issued in March 2020. After that, the street was hopeful they got re-inspected from April to May of this year. But at that point, they were issued 10 observations. So the Halol facility continued to be classified as an OAI status in August of 2022. That's when the street was probably factoring in that, Halol is probably going to take a longer time to remediate. And that's exactly what's happened. It's escalated to an import alert. So that means that it's probably going to take them a longer period of time to resolve these issues, and that always continues to be an overhang for a company, even something like Sun Pharma. Separately, remember that their Mohali facility also received an OAI just in the month of November. It was inspected from the 3rd to the 12th of August and was issued around 6 observations. So that continues to be a bit of a negative that, yes, there are 2 plants which are now under the regulatory scanner when it comes to Sun Pharma. What's working for them? Their specialty business, which has been doing well. So maybe that could offset some of the losses.
Okay, all right, Ekta. Thanks so much for explaining all of that to us. Explains why the stock is down close to around 2.5%. But it's that time of our show where we shift focus to our special segment and we get you a few ideas for profit from Money Control Pro. Madhu Chanande of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Madhu?
Safari Industries had a huge outperformance and the stock seems to be consolidating in recent times. Revenue performance was very strong in the second quarter. With travel on an upswing, both domestic as well as international, school, colleges and offices reopening and wedding season back in full swing, we expect demand to remain strong. While margin was tad weaker in the second quarter, significantly enhanced sourcing from manufacturing bases in India as well as Bangladesh and reducing its dependence on Chinese imports and dominance of hard luggage are all structurally positive for margin in the long term. The company has been gaining market share from unorganized players post-GST and is ideally positioned to ride the sector tailwinds with a diverse product range. Exports too remain an area of opportunity. Finally, despite the rally, the valuation is at a discount to the discretionary consumption universe.
Well, it's definitely turning out to be a bit of a flattish day for the frontline indices, but it's definitely the banks which are dominating in terms of sentiment on the upside. So we have the bank Nifty, which is up around 0.6%. And overall, you'd have to say a positive advance decline ratio. So let's see how that moves and trends at this point. But if you'd have to say in terms of the banking space, it is Axis Bank which is ruling the roost. Remember, that stock has given returns of around 37% on a year-to-date basis, and it's building on that. And something like an IndusInd Bank doing well as well. That stock up around 30% on a year-to-date basis too. But let's concentrate on a couple of other stocks now. North American Class 8 truck orders have fallen 20% sequentially in November. The region constitutes about 30% of Ramkrishna Forging's total revenue. How is this slowdown in new orders going to affect the company? We have with us Naresh Jalan, who's the Managing Director of Ramkrishna Forgings, joining in to discuss this and more. Mr. Jalan, hi, welcome to the show. If you could just start by detailing to us the fact that Class 8 truck orders in North America have fallen quite significantly for the month of November on a sequential basis. What does that do to your business currently?
No, I think, like I have already stated, couple of times, I think Class 8 trucks are not the only sector which we cater to in the North American market. We are prevalent across Class 5, Class 7, Class 8, all the markets over there, and including LCV. So we are not majorly affected with Class 8 segment in any way.
Okay. So in the broader sense, if you could just give us an idea in terms of what's happening in the North American markets as a whole for the company, as well as the MHCV segment. If you could detail these two segments' performance right now.
I think in overall North America, we are doing extremely well vis-a-vis last year. We should be at least doing our exports close to 20% more in terms of our overall exports to as a company. And in terms of North America, we are doing extremely well right now. And we see right now the projections, whatever we have, we will continue to do extremely well over next 2 years.
All right. Hi, Mr. Jalan. Morning. As you said, you'll do more than just MHCV as well as the North America Class 8 truck sales. So give us some more details then. I believe that the domestic MHCV plus North America, it constitutes nearly around 85 to 90% of your total mix as of now?
No, I think MNSCV constitutes close to 60%.
Right.
Overall, in terms of domestic as well as exports together,
right,
it is around 60% of my total order book.
And what about the other part of your business, that's North America?
There's oil and gas, off highways are there.
Okay.
Railroads are there in a big way. LCV market, we are doing extremely well right now in the North American market.
Right. So what about your non-auto part of your business? Currently it's small, but the government's trust on railways has been quite large. So do you see your non-auto business scale up? Point number one, what is it? Where is it headed? Point number two, EVs also is very, very small. But see, in the next few years, what do you see that share headed to?
In terms of railways, we are seeing right now a lot of traction in railways in India. And I think with the government trust in investments into Indian railways, this year itself, we have almost doubled our top line from Indian railways. And we expect five-fold growth in next 2 years from Indian railways. Okay. And for that, we have already done our capex way back, and all our approvals and other things are already in place. So slowly, steadily, we are growing our Indian railways business. And with the thrust right now we have from the government of India, I think this is going to be five-fold in next 2 years.
What is? Give me a couple of numbers, sir, please. Non-auto is how much of your business? Where is that headed? And EV is how much of your business right now, and where is that headed? 2 numbers.
Right now, I think non-auto is close to around 9%.
Yes.
And I think we should, by FY25, we should be close to around 20% in non-auto globally. And in terms of EV, right now we are only at 2%. By FY25, we are looking at almost 5% in terms of our top line in EV.
Okay. Now, just for the near term, Mr. Jalan, you know, the entire energy crisis which is taking place, you have said that it was in fact a positive for you because there are orders which are coming into the company on account of the energy crisis and the issues taking place in Europe. Can you quantify that for us? Is that trend still continuing?
Yes, I cannot exactly put a quantity to it, but the order flows are extremely strong from the European OEMs, and we expect Europe to do extremely well for over next 2 to 3 years. And the movement has just started, I think, with India gaining most of the share of business in the engineering from the European.
So how much is Europe as a percentage of sales currently? How much are you getting in terms of incremental order inflows? How much do you expect it to probably rise? Just give us a sense in terms of numbers, what the opportunity might be factoring in such a windfall.
I think approximately close to around 9% to 10% is my right now European sales, which will double by next year. And probably with the current order book or order flow, whatever we are having, this will be equivalent to North American sales in next 2 years.
Okay.
And we are looking at increasing our overall exports by almost 30-35% year on year for next 2 years.
All right, Mr. Jalan, final few questions before we let you go. I think you have a target of around 5,000 crores of revenues by 2025, right?
Yes.
To get to this number, how much of capex do you need to put on, or how much do you need to incur? And your debt was around 1,300 crores. Say by 2025, what is your debt number likely to look like?
No, I think overall my debt number is going to go down from here.
Okay.
And we are not doing any more debts by borrowing. I think most of our debts, which whatever we are doing, is through internal accruals.
Okay.
And all capex, I think at the range of 250 to 300 crores will continue for next 2 to 3 years, which will take us to 5,000 crores. So, and this is mainly going to happen through internal accruals.
And debt has peaked out at 1,300 crores. So by 2025, yes. Do you have a number? Debt comes down to what, 500 crores or any number?
I think we don't have a number, but basically what we are working is to basically get to debt to EBITDA level below 1.
Okay, all right. It's been good speaking to you, Mr. Jalan. Thanks so much for stopping by and giving us all those details. That's heartening to hear because you're doing less than 2,500 crores in the past year, and you're saying you can go to 5,000 crores with a capex of just around 200, 250 crores on a per annum basis. So sounding optimistic, hopefully demand keeps pace with your plans. For the time being, we'll slip into a short break. You come back, we continue our focus on markets and stock-specific action.
Welcome back. Well, for the markets, it's just about steady with the Bank Nifty up around 0.6%. Just want to point out that besides even the likes of Credit Suisse, which have been positive on a couple of these PSU banks and the likes of PNB, there are a couple of other notes which have come out which have been quite positive with regards to the 2023 outlook. For example, Morgan Stanley says they expect another strong year in the banking space given sustained growth and a benign credit cycle, and the pace of deposit growth recovery should probably be something which should decide the extent of the upside. So that's what's taking place in the entire banking space. To watch out for a couple of broader market stocks, the likes of Venki's, which is showing a good amount of volume and price action, and a couple of others which should come up for you on your screen. The likes of BL Kashyap, which is doing well, up in like around 10% for that particular stock, and maybe a couple of these smaller counters such as Digi Spice Technologies, which is doing well in terms of volumes and price as well. But on that note, it's a wrap on Chartbusters. Stay tuned. Trading Hour comes up next.